You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, February 4th show. I am here to empower our community, providing you with opportunities and solutions when it comes to your money. If you're hearing my show at a different time or day, you are listening to a rebroadcast, you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything regarding money. Chat with the guests that I have in studio. Right now, I have Michael Chaffey with International Business Solutions. Michael, another first-time guest in studio. Thank you so much for coming in and joining me.
Thank you so much for having me in today.
And a little bit about Michael. Michael is founder of International Business Solutions, LLC in Woodinville. He's a licensed CPA with 27 years in public and private accounting experience. His expertise focused on improving businesses' operations in addition to oversees the portfolios of high net worth individuals. Michael is happy to have helped clients use the same tools to retain capital as high net worth individuals use when they fit correctly. He also provides tax services and individual businesses, trust, and estates. And Michael, today we're talking about keeping and growing wealth in 2017. And I would think that would be a pretty exciting thing to think about doing. So in 2016, year's over, and it's time to call the accountants in to find out what the wounded is and what's happened. And is there any for our listeners that can do now in 2017 to improve the outcome of their tax filing?
Well, thank you for the question. There are a couple things that people can do. One of my favorites is they can still contribute to their IRA account at this point, all the way through April 15th. And as you may note, we are just a little bit late for filing a estimated tax payment on January 15th. That is kind of my second favorite thing to do for clients that may be a little bit behind the eight ball. A lot of times clients have real estate transactions, stock transactions, a significant self-employment income during the year that was unanticipated. And catching up on January 15th is a great thing to do. But let's flip back to the IRA concept. And people need to pay more attention to saving for their own retirement these days. And actually, it's not just these days. It's been that way for quite a while, since the disappearance of the conventional pension plan and so forth. And a lot of people don't take into account that if you miss your IRA contribution this year for through April 15th for 2016, you don't get a redo.
Yes.
You're done. And the amounts are really quite small when you look at what it's going to take you to retire. That makes it just all that much more important that people make this a priority in their spending.
Yes. So, Michael, you have a background as controller and CEO for commercial real estate management firms in Puget Sound area. What experience can you share with our listeners that may be thinking about buying a home?
Well, I like to tell people, listen to the experts like the two wonderful folks that were on before me.
Yes.
And they will usually tell you to pay attention to the location. I find this to be even more valuable in the Puget Sound area, and even more so today, primarily because our transportation infrastructure is, well, subpar is about the most generous thing.
Has some challenges.
Right. Okay. Has a challenge. That's even more charitable. Thank you for that. And, if you're going to live anywhere past walking distance from work, pay big attention to that. That's going to be very valuable to you. Another concept I like to bring up is, go for it if you've done your homework. But when you look at a home, if you're looking at it and you don't know if it's in a good neighborhood, one that's well taken care of and going to maintain that status, or is it going downhill? If you don't know that kind of thing, you haven't done your homework. You really need to go back and kind of start over on that concept, because as much as people like to talk about the American dream being home ownership, and I won't get into what I think the American dream is, but at any rate, they talk about this is going to make their life just so much better. Well, if you locate in an area where the traffic is already bad,
yes,
and traffic continues to go the way it has been going and get worse, what good is it to own a home when you're away from it for, say, 3 hours to start with, and 2 years
Sure.
from now it takes you 5 hours to make the commute? It's just not a great idea. And I would say, people also need to think about the tax code is really friendly right now so far as buying a home and watching it appreciate as you live there. And you get a generous exclusion on the sale for the gain.
Yes.
And I think people look at that as kind of irrelevant, but in fact, it's really relevant because it makes a lot of difference not to send the money to the United States Treasury, but to keep it and work it for yourself.
There you go. So, Michael, with your helping your clients in doing their accounting and with everything that's happening in the Puget Sound market, what are you advising as far as investing in rental properties, getting in the investment market?
Right. I see a lot of people that have that idea, and I have to really sit them down sometimes and ask them, what are your alternatives? What's available to you besides real estate, and what is your motivation for entering the world of being a landlord? And I kind of boil it down to a few things, such as, location. One of the big things that we've seen in the Puget Sound lately is the city of Seattle seems to know quite a lot better than the landlords how to screen clients and how to just require them to take the first acceptable client and things that are kind of contrary to the capital market theory. So the location is a big thing, and I also talk to people about liquidity, and they quickly tell me, well, I can get a loan against it if I need the money. And I say, well, yes, you can, and that's all fine and good. And I know quite a few people that might be able to help you out with that. But it's not like calling up your brokerage firm and saying, send me a check for $10K. I really need to buy my wife a new car. It's not that kind of a thing. Another valid concept is management. Who's going to be getting the calls in the middle of the night when there's a flood?
Yeah.
And that kind of thing. And who's going to screen those clients, and how tightly are they going to screen those clients?
So it's like everything else that you're investing in. You want to really make sure that you understand what that investment is, what the pros and cons are, and see how it's going to fit within your overall financial picture.
And I'm glad you mentioned that, because the other two things I like to have people think about before they jump in is the cash flow. And people will tell me, it's okay if I lose $50, $250. It depends on who it is, obviously, what their threshold is. But they tell me it's okay to lose a little bit of money. I'm not going to get rich. I'm going to make my money on the capital appreciation here. And I say, that's great. Did you factor in the management cost you're going to have?
Sure.
And the maintenance cost you're going to have if you're not doing it yourself? And if you are doing it yourself, what are you living without?
Yes.
Are you
so it's running the numbers, making sure that the numbers come out favorably, and that you're understanding all the costs associated to having that asset. So, Michael, what about distributions? Are there distributions in store for 2017? I mean, you may have said, what the market is supposed to be. I might have listeners saying that with Trump coming in, there's supposed to be a crash coming up. Maybe, maybe not. But what are your thoughts?
Well, that's a great question, and clearly there are going to be big changes based on the election. And like a great deal of other intelligent questions, it really depends. Many people think that their crystal ball is the only one that has the right answer, but their track record indicates that their crystal ball really isn't that great. So I look at what's been promised, and the promises of lower taxes and regulations, less regulations, that's a prescription for growth. And that's kind of a double-edged sword I'd like to talk about at another juncture, perhaps.
Okay.
But I really think that the leaving taxes high and regulations increasing over the past 28 years or so has pretty much slowed down our economy to what I call an unsustainable pace. We have bigger issues that result from that. So I'm just hoping that trade policy, we've heard headlines about taking hard lines against some good trading partners, and Puget Sound really needs that trade to continue along. And that's going to keep the housing market healthy and the job market healthy. So I've got my fingers crossed. So either way, there are going to be disruptions, and I'm hoping that they'll be positive.
Yeah, we'll have to wait. We'll wait and see with all the changes what positive and not so positive might come out of it. So converting to an S corporation to save money, what would be your advice on that, Michael?
Well, a lot of people think that you can save money when you're not making any money, and that's a little bit upside down. The conversion to an S corporation really makes a lot of sense when people are making consistent money as a sole proprietor or an LLC. And for people that are not familiar with LLCs and entities and sole proprietors and corporations, and an S corporation, an LLC, and a sole proprietor all flow through into the individual's tax return. The thing about S corporations that is saving people money is the lack of self-employment taxes that you pay on your distributions. And so I generally ballpark those self-employment taxes at 10%, and there's kind of a Rubik's Cube as far as you get to pay 15.3%, and you get to take a credit against your income of 7.65%. And assessing yourself a tax on your gross income versus reducing your gross income by half that amount does not translate to a number right in the middle. And so 10% is where I just ballpark it so I can do the math in my head. But if you consistently make about $100,000 as an S corp or sole proprietor, an LLC or a sole proprietorship, it begins to start to pay off to become an S corporation, put yourself on payroll for reasonable compensation, and then take those distributions free of self-employment tax, which saves you on $50,000. My math says that's about $5,000. And, there is a cost to that. There's a little bit greater administration if you're not currently doing payroll. That takes time or money. And that's why I figure right around $100,000, you start to save money being an S corporation instead of a sole proprietorship or an LLC.
So what are you seeing with your clients right now, Michael, or clients that I guess maybe are not your clients that makes mistakes that they're making that's going to cost them a lot of money? So as I wrap up my time with you, what would be your shout out to my listeners to avoid?
The biggest thing I think people should avoid is making decisions based on tax policy.
Okay.
I think I see a lot of people that pick up headlines and they seize them as if they're gold or platinum, and they don't quite think things through. Every transaction people get involved in, they should look at based on the merits of the transaction itself, and only on a kind of a secondary level look at the tax situation as a perhaps a gotcha. But don't put the cart in front of the horses in this example. So that's my greatest little morsel of advice for people.
Wonderful. Well, Michael, thank you so much for joining me in studio. I appreciate your time and your expertise, sharing it with my listeners.
Thank you.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy the rest of your Saturday. I'll be here same time, same place next Saturday, right here on 1150 AM KKNW.